Hello, hello, hello. Happy quad witching, triple witching Friday, whatever we're calling it now, because you don't have the same single stock options still expiring, but people still refer to it as quad witching. So we'll go with that huge OPEX, I think 5.1 trillion, over 5 trillion, biggest one ever. So, good morning, McRangers. Good morning, Patrick. We've always known what Alexa was. Now, what was Alexa? Crap. I don't run a single Alexa device in my home, but now I can pay for it. You know, forget it. Oh, yay! Yeah, well, projects 1.9 trillion deficit for 2024. Yay for us. Deficits don't matter though until they do. So we'll see. Housing defaults have hit the highest level since 2011. We shall see about that too. It's going to get interesting. Nvidia pulled back yesterday. What else do we have? What else do we have? There it goes. Amazon considers $5-10 monthly fee for Alexa. Oh, AI everything. Yay, AI. Do you realize that a $5 move at this point in Nvidia is equivalent to the entire market cap of Intel? Now, Intel is nowhere close to Nvidia in terms of their GPUs, but that's insane. Intel will catch up at some point. Good morning, Sterling. Good morning, Martinez. Good morning, Tony. What does that mean? You're no longer here, Richard? Football rules? Did you just what? I'm confused. So does Adam Taggart. Followed him over in new podcast. Way and better than new Wealthion. Yeah, he left Wealthion. He has his new thing going on. Good morning, Jake. Good morning, Jacob. All right. Hello, Charles. So, by the way, I'm on Ninja Trader at 11 Eastern. Maybe I'll get to talk some more wedge patterns. Just using the September futures contract. Hopefully, we'll get to that. Don't know what they have planned, but I'm gonna go into. So, if you want to possibly learn more about the wedges, that's the only topping thing we have right now. Besides this, yesterday we did drop, but that's so far just a normal pullback, which we haven't had even in a while, a 1 day pullback. So today we got the composite manufacturing and services PMI 15 minutes after the cash open. We have the consumer board leading index, still expect to be in contraction. That's at 10 a.m. Eastern. So 30 minutes after cash open, then we got rig count. So very quiet day today. So far, oh my goodness, what is this? Nvidia is red. Down 258 basis points. What is going on? The world must be collapsing. Apple's up. I think you put something in here, Sterling, about the where is it? Where is it? There you go. Bernstein raises price target to 240 from 195, maintaining an outperform rating. Again, analysts will chase it higher. And then if it doesn't get there and it starts going, because I think the Apple's incredibly overvalued right now, incredibly overvalued. But then we'll start cutting it and chasing it back down lower. Again, an analyst is not a trade. I'm not even going to get started on analysts. But there you go. Apple's up 80 basis points. Good morning, Heinrich. Your thoughts on housing data from yesterday? I mean, housing is still so regional. You have areas of the country that have very limited inventory. So where I sold, very limited inventory. Where I'm looking to buy at some point again, lots of inventory and more coming on. So overall, I mean, the housing bulls will point to anything positive that I think we've stalled out and at some point are gonna roll over, but when that rollover depends on regional, like Florida, parts of Texas, parts of Arizona are already starting to roll over. But other areas, northeast, there's very strong. Where I sold in North Chicago, north of Chicago, very still a strong market. Still talk to my agent there because there's so little inventory. Good morning, Royal Palms. Hey, Christoph, Grand Rising. I quit. I think that the market is the market. Dark screen. The market doesn't really care about you or your positions. The market's going to do what the market's going to do. So I know your setups, and that's why even good setups can have losing streaks. That's why you want to limit your risk and make sure you're in the game for a long time. All right, so we got Nvidia still pulling back. Let's just refresh this because it's just real estate at the bottom. By the way, home starts breaking down. Home starts. So from that end, I think home builders are going to get crushed coming up. Technology is second lowest today. Utilities are the only thing leading, but we'll have to see how that goes into the massive option expiration. This is one of the 4 least favorite trading days of the year for me personally. Uh, so, you know, my perspective is just don't do silly, don't do stupid, don't lose money. If you don't have to do anything today, wait, let this flush out, and let's go into next week. Also, we got people saying July is the no-brainer trade of the year. It's been up 10 out of 10 over the last 10 or up last 10 years, roughly about 5% on average. Whenever I hear the no-brainer trade, yeah, if we pull back ahead of July, could be interesting for a rotation buy up into that. But again, doesn't have to run all the way through July. Now, if we trigger one of these wedge topping patterns, then I wouldn't be looking to buy in July. But other than that, the trend is still up. But when somebody says no brainer, be careful of that. So we still have a close to 60% for the rate cut in September. Fear and greed still in fear mode. That's where we sit now. We had CarMax, which was a beat. Did not look at FactSet, but we're waiting for our next quarter's earnings to start ramping up. What are we watching for today? Friends in Texas say that recent immigrants are renting homes and 8 or more move in and ripe for gains. Doesn't surprise me. But even around here, I'm seeing for the homes for rent when they do rent out because of the price that they're at now. And this is I'm not living in like a super rich neighborhood for renting. Uh, there's you get 5 or 6 cars parked in front of the houses every night when people come home. There is a lot of vehicles there, a lot, because it takes multiple people to rent things, to afford things. Hey, Coco. Hey, Christoph. How are you doing? SBL. Let's just look at SBL real quick. SBL. Did I get that? Can't be right. Did I get that? SLB. I looked at okay, SLB. Yeah, there you go. That is Schlumberger. Haven't looked at that in quite some time. That is a nice double bottom setup. Really nice double bottom setup. It's going to gap up. So didn't officially trigger yesterday, confirmed but did not officially trigger. So that could be tradable on any backfill, partial backfills. Because it looks like the daily rotation zone will be out of the way. And on the long term, there's there's the support he was talking about. Let's just see. Just ahead of the 62.5. So in the key reversal zone. And look, it could take it back to the upper end of the rotation zone on the weekly. So that's interesting. Thank you for pointing that out, Christoph. OXY triggered the daily double bottom yesterday and hit the second target. Also closed above the 200. Well, oil's been still chugging. there you go. There you go. Second target hit. Still closing above the 200. So, you guys are too good. Too good. All right. What am I watching today? Keep an eye on yesterday's low. Oh, come on. Don't do this. Keep an eye on yesterday's low. Right around 55.25. And the key area I'm watching the upside is 55.61. If we break through there, if we do bounce back, we got this little, it's really lopsided. You see here, I'll just use these for potential targets, the upside. But if we combine that, this is the only, again, don't do silly today. Don't do silly. Really be watching though about this 55.65 area is key in the and on any short-term bounce today. And if we do break down yesterday's lows, and then if we have a bigger sell-off, if we get some selling pressure, it's 55. It's 5,500 is the key support. The Nasdaq again, yesterday's low. That's what's key. This is a better form double on the Nasdaq. So above 2086 on a closing basis, 20,150, 2181, 2213 are rough target areas. I just want to see how that lines up with the retracement harmonics. Look at that. I thought it would line up nicely. So that's very key, taking it straight to the 62.5. So that would be the area. That's the nicer setup on any rally today is in the Nasdaq. Doesn't even have to trigger, but that's sort of key. And if we do break down, the first target is about 19,835 area. And that's pretty key. That would take it back to the daily rotation zone. The Dow closed above, let me pull this off real quick. You see here, it closed above the 62.5 in short term. So we could see the Dow at least retest this key high area from mid-May and end of March. By the way, this is not valid anymore. So that's where we sit there, but the Dow's just in huge consolidation. Huge consolidation. So that's where we sit with the Dow. Russell, not much to talk about. Still, the key resistance I'm watching is 2051. Key support coming in about 2035. If we break down from there, it's 2024. VIX slightly elevated yesterday, climbing a little into OPEX, but I want to see how this VIX looks next week. So there's just not much to talk about today. DAX contract roll. Contract roll. See if we back adjust this roughly flat, but the contract roll. So key resistance coming in about this 18.5. We'll have to do more analysis on that next week. The notes still trying to climb up with the note futures. Still next target is 111.04.5. The 10-year, let me take a look here. No more little mini double. No more little mini double. So, still, I don't know if it's going to get back there to the 4 handle, but that would be interesting. That would be very interesting. Again, you could get some mortgage rates coming down if that keeps pulling back. Dollar index, though, closing above the 62.5 yesterday. Already tagging just shy of that 75, but still 105.80 areas of magnet price now, with major support coming in about 104.70. Crude continuing to climb. Now, crude's very overbought, so we should at least get shortly come some kind of pause. But I'm watching this 81.95 for a closing basis. Even if we close above there, we'll be watching for some kind of pullback. But we're getting a lot of support coming in here. A lot of support. By the way, there's some significant resistances trading into now. That's why I'll be going into next week watching to see what kind of pullback we get. Gold Little breakout above the shelf yesterday. Remember, in the short term, I need to close above about 23.90. What is it? 23.98. Other than that, we had the nice little breakout move hitting that 50% harmonic. So want to see gold still could have some room to run the upside, but it's got to get that close above 23.98. The yen, they were trying to talk it up last night. So strength up, not the price on this going up. The price going up on this is yet weaker yen. That was not long lived. We're almost at 87.5, but they were stressing again, you could get some more intervention. So we're getting clearly into intervention territory. So just keep an eye on that because we could get a sharp and sudden reversal. Although the intervention at the beginning, end of April, beginning of May, already erased within 2 months. This could get interesting longer term. Bitcoin, right down. I'd be lowering the stop on any shorts already. Getting that close to target. But still a couple more targets to go potentially. Want to just see something real quick here. The key area to be watching for on Bitcoin is this 62,300 on a closing basis over the next few days. What else do we have? I visited 2 model homes in Fulshire, Texas, and the agent mentioned an available interest rate of 4. They're buying it down. They're buying it down, Martinez. And that's probably only for short term. A lot of them do these buy downs. Some of them even do 3-2-1 buy downs or a 2-1 buy down. So what they're doing is they're shape, and it's not permanent. There's no way a home builder's giving 4.5 to 5% perm for a 30-year mortgage. They might be giving 4.5 to 5% for 1 to 2 years, and then it reverts to what it. I mean, you essentially sign up for a higher rate, but they're buying it down in the short term to move homes because they have profit built in, so they're taking some of that profit and buying down the rate. But where people get stuck is, let's say, and then they're going to say, hey, but you can refinance. You can refinance because rates will definitely be lower in a couple of years. A, what if they're not? And B, a lot of people aren't putting a lot of cash into these homes. They are still doing, some of these are doing 0%, which means 0% because they're putting up a second too. So they're rolling your down payment into a second mortgage, and you technically don't have anything down, but it's getting financed, or they're just requiring 3.5% down. Well, if that home drops at all, you're not going to be able to refinance unless you have cash out of pocket. That's where it's interesting. So what usually leads to home builders cutting prices as opposed to existing home build? Well, home builders have to move their inventory more so than existing home buyers. Think about it. You've built, especially houses built on spec, right? They've already built the house. It's a sunk cost at that point. And they've built in, they want to move it because it just sits there. They've already tied up all the money. Whereas an existing home builder, unless something happened in their life where they have to sell, they can sit on it. They can be pickier. But a home builder wants to move that inventory. They want to move it. They don't want to be stuck sitting on a home for 6-9 months. And there's some home builders out here who have been sitting on homes for 6-9 months. They built on spec, and they're starting to cut the prices, but they're still asking for insane amounts. But they're starting to get more and more aggressive with price cuts. Now, what's interesting is when those price cuts start chewing into existing home sellers, like used inventory. When I can go buy a new build per square foot that's cheaper than an existing build that's like 10 years old or 15 years old, that's where it starts getting really interesting, because that starts putting pressure on the existing inventory. I'll call them used homes, because hey, home builders have more room, and even if they're taking losses on a couple of them or a neighborhood, they, if they're a nationwide builder, they could still balance that out in other areas. They asked for 3%. So think about this though. They're buying down. You might not be able to refinance if the housing pulls back over 3.5%. So they could do a buy down of the rate. And then fine, you think, oh, I can afford this payment with 3.5% down, and oh boy, I'm getting a 4 or 5% rate, but that rate's going to change. And if you can't refi, this is where people get caught. Because remember, you're still paying the house long term for what you'd buy it for, but people were buying the payment. It's buy the house, date the rate. But if housing pulls back, you're stuck with the rate, because if you can't refi, especially when you have a very little skin in the game, look, you might have to come out of pocket to refi. And if you could only put 3.5% down, there's no refining for you. That's where people, I hate that term. Buy the home, date the rate. Ugh. No, you're still paying long term. It's a purchase. You're just financing it. Oh, what agents are telling people around here? Oh, you'll be guaranteed to refinance. No, there's no guarantees to refinance. A, something could happen and rates could be higher. Okay. B, if housing drops, you know what? A lot of people can't pull additional money to put into the refi, because if you don't have equity, you can't refi. So people, it's going to get very interesting over the next couple of years. And that's true also, McRangers. That's true. They're not going to move to the next thing, but I'm seeing more and more houses new builds just sit there, and they're slowly cutting prices because they're just sitting on spec homes that they really jacked up. I mean, I'm seeing spec homes that, like, pre-pandemic, would have gone for $1 million. Now, same size, same everything. They're going for 2.5. So they've got it. They, even with inflation, they got cushion in there. They're just hoping that stupid continued, and stupid's drying up very quickly. All right, not much to talk about with the spiders and the Qs. Almost that next target area. Slight gap down this morning, 544.84. On any rally, it's about 547. Key support coming in roughly about just below where we are, 544 and then about 533.30. The Qs. The Qs are very key support coming in about 477. 481.84 is where we're looking to open. 481.47 would be to the gap fill. Then I'd first look at yesterday's low, 479.62. To the upside, the key area is 485. The quality of a lot of new builds are junk. What else do we have? We had Nvidia. Look at that. Look at that reversal. But think about this. Look where Nvidia is. Here was their earnings. That could easily drop back to 95. And that would only take it back to where it was pre-earnings. Not saying it's going to go there. But your key support in Nvidia is about 125 in the short term. 124.50 to 125. Yeah, it was a bearish engulfing bar. I wanted to see it close a little lower to be an outside key reversal bar, but it didn't. Fiance has a 2.6 mortgage in Maryland. I want to move to another state, but she will not give out. And there's a lot of people. A lot of people, because of their current mortgage rates, and they couldn't even rebuy the equivalent of what they have now. Even with rolling additional cash down into it, their payments are higher. So you sell and you take the money out, but then you, even if you're putting down 50% on the next home, your payment could be higher than your old home. So a lot of people are in that same boat. All right, let's just take a look at the S&P going into the open. Going to really be paying attention to this 5530 area, because there's like a trap door right here to roughly 5506 if we start breaking down. So I'm going to be paying close attention to that. Remember, you don't have to trade every day. You don't have to do something every day. Some days are best to just, take the day off, do something else. All right, with that, I've got to run. I hope everyone, let's just see where the tick opened. Got to run. Very neutral. Look at that. Completely neutral tick opening. Completely neutral tick opening. So I'm just going to be watching this 5530 to see if that holds. Other than that, I'll be on Ninja at 11 a.m. Central. Protect the capital. It was a great week. Good. I'm glad you had a great week. So don't do stupid, especially on this option expiration. All right. I will talk to everyone next week. Bye for now. Have a great weekend.